Good afternoon, friends. I'm happy to introduce our distinguished guest for today, S. Ramakrishnan, or Ramki, as he's called by all of us who work with him. Ramki heads the wealth and personal banking business for HSBC in India. He sits on the executive committee of HSBC India, which steers the bank's business in the country. Ramki has been with the HSBC for almost 10 years now and has held a number of leadership roles both in India and internationally in Hong Kong. Prior to joining HSBC, he was with HDFC Bank. Ramki, welcome to the show.
Thanks, Adil. Thank you so much for inviting me here. And I'm actually a little humbled, I would say, or a little honored if experts speak. I never thought of myself as an expert on any of this stuff. I'd much rather call it experience speaks because experience I have, expertise I might not. But it's great to be here, Adil. Always good to talk to you. You're a man with ideas. I remember first meeting you a few years back, and just the energy and the passion that you have for this business and for the industry. I think it's something we all can learn from. So thanks, Adil. Thanks for calling me here once again.
Thank you, Ramki, for saying those kind words. So before I, ask you questions on expert speak, I know that you're passionate about music and animals in that order. Has this helped you cope with the tough lockdown we've been through in 2020?
It's the best possible thing that could have happened with me as far as this is concerned, because lockdown means I've been at home for the last whatever 8 or 9 months, and the biggest stress buster there has been I've got a pet lab at home. That's been a great stress buster. I've been able to spend time with her, and I've been able to spend time developing my own kind of musical skills, so to say. So yeah, I think if I'd been coming to work every day in office, I may not have been able to do that. So I think yeah, it's the lockdown has helped me concentrate on that, and at the same time those two have helped me get over this entire lockdown drama of being in one room for a few hours day in and day out. Definitely, yeah.
Fantastic, fantastic. So let's move to our first section, Ramki. Now, you've had a ringside view at the helm, right, of a large foreign bank in India last 10 years. Where do we stand today in terms of having or providing access to credit for all Indians? How has the last decade been, and what have we done well, Ramki?
See, I think that the last decade has seen a lot of positive things happening, and you would remember maybe over a decade back when the entire sort of the card industry in India kind of blew up. We didn't have a strong bureau, we didn't have strong collections, we didn't have strong policies. So I think we've all been scarred a lot 10, 15 years back, maybe 2005 onwards. But in the last decade or so, I think the industry, the regulator, the banks, the consumer, all of them, I think we've got a lot more disciplined. We've got a lot more forward thinking. We've got a lot more aligned. And therefore, I think the growth has been good, steady, in many cases, been exponential as well. But I think most importantly, it's been safe. So I think that's what I would categorize as last 10 years. It's been very good foundations being laid for the years to come. So I'm actually pretty happy that we went through the last 10 years because we built those kind of foundation stones, so to say.
Fair enough. So 2008, a lot of people burnt their fingers, but the last decade, we've been safe and we built a solid foundation. So tell us, Ramki, what do you expect from the next decade when it comes to retail banking?
So next decade is, I know, which was it Marshall Goldsmith, his famous book that said what got you here won't get you there. I think
Hmm.
firstly we have to change our mindsets. Okay, that whatever we've been doing till now, if we assume that we're going to continue the same thing and something new will happen, it's not going to happen. So first, let's change our mindsets. Let's recognize what's changing in the industry. Recognize what's changing in the consumer, and therefore bring about new products, processes, technology. And I think so. The one thing that you were to say, what's going to change in the next 10 years is technology. It's already changed. But that is the one thing that's going to be a differentiating factor about a successful business and a successful consumer as well. So anyone who's going to sort of stick their head in the sand and say no, I still believe in paperwork. Um, I'm not saying anything bad will happen, but he or she just may not grow as much or as fast. So technology is something that's going to be there, and it's more an ability, like I said, to figure out the changing consumer behaviors, and the changing regulations and the changing kind of guardrails which are in place, and how you can adopt quickly to them. I mean, you would know this better than anybody else. I think you're the one who leads a lot of this change in this industry, Adil. Bank Bazaar does a lot of great work in this field.
Right. So you said, Ramki, and we at Bank Bazaar firmly believe this, right? And we've been partnering on this for a while,
Yeah,
that technology is going to change a lot of what happens in the next 10 years. And anyone relying on paper, right, could get left behind. Now,
yeah,
let me ask the question in a different way. When we talk about giving access to credit for the next 200 million
yeah.
Indians, right? What role do the various stakeholders have? Now, you leading this at a large foreign bank, what is the bank's role? What do you see as the role of maybe fintechs, of policymakers?
So let me start with this. You said, okay, 200 million Indians. If I were to just take, let's say we can break this up into the market that's available to us into maybe two groups. And I'll talk more about the first group. The first group is about the set of customers who are banking, who are banked, but they don't have a credit behavior. They don't have a credit history. That's our research says close to about 250 million Indians. So that's a great number to have. And then there's a much larger number which is completely unbanked to begin with. And of course, forget the credit behavior, they're even unbanked. So I think the second part, I'd leave it to the local banks. I think they're brilliant at that. They have a better reach, they have a better understanding. That whole India versus Bharat story that has been talked about before, right? So that's there. But even if I were to take this bank but no credit, I think the question is, are we able to reach out to the consumer in the manner he wants it, at the time he wants it, and with the product that he wants? Okay, so just putting a credit card in somebody's pocket may not serve the purpose anymore. So if you want to take this 250 million and get them to be a lending consumer, you've got to figure out when do they need the loan. It's not that you just go and, gone are the days when we could just have a kiosk in a mall and have some people stand outside and say, do you want a credit card? Sure, I'll probably end up putting a plastic, but is he going to use a card? I don't know. But go back to the changing behavior. In the last few months, we have seen online purchase, for example, improving, right? Now, the minute you get onto that, that's the time he needs a finance. So are we able to tackle him at that place when he wants it is going to make the change. So that's where the bank's ability to lend at point of sale is one thing that comes in. A fintech like you or an aggregator like you to bring those consumers together with a product and with the right set of products, that's where it comes in. Let's take the example of you talked about other players. Let's take the regulator. Just opening up something like video KYC has made life a lot easier because you don't need to have these feet on street going everywhere, right? So if I would take all of these, then you have sales agencies, your third party sales agencies, DSAs that we talk about. They have a role to play. So I think if everyone comes together, the bureau, so it's got to be the lender, it's got to be the aggregator, the fintech, the bureau, the regulator, the TPSA, and the consumer. Typically what happens is when we say stakeholders, we leave out consumer. I think the consumer is the biggest stakeholder. So they all have that role to play in a different manner, but I think the stars are aligned because a lot of foundation, like I talked about, have been laid. I don't know whether I'm making myself clear on this.
Yeah, absolutely. And you mentioned video KYC. We see it as really a cloud of hope, right? A sign of hope in otherwise what was a very tough year. And in
Yeah,
the middle of lockdown, that helped restart business. Just yesterday, there was a CKYC regulation which the RBI put out, allowing reporting entities to share KYC. So makes complete sense. Now, let's move to the second topic, Ramki. Now, we've been talking about growth, right? But in all
yeah.
my interaction with you, I realized that, especially when you're at the helm of a retail bank, right, you need to balance growth and risk. Tell me, from a risk perspective, are we ready for the next set of consumers, or how should, or what framework should we use when we think about how to bring the next millions of consumers onto the retail credit fold?
So Adil, I think you know my answer on this because every time you and me have met in my office, I've never started my meeting unless my risk person is in the room, right? So and you're witness to that because that risk person has an important role to play. I mean, it's that age-old story. I mean, I know everyone's heard it. Is that uh, what is the role of a brake in a car? And people say it's to slow down the car. Actually, it's to allow you to go faster.
Mm,
If you did not have a brake, you would never go fast. You'd be going slow only.
mm,
It's the same role of the risk. It allows you to grow faster because whenever you need to pull the plug, you pull the plug. So that's my understanding of the role of risk. However, I would just add one thing here. Risk, the meaning of risk has changed. Traditionally, from the 2008 days that you talked about, it's been credit risk and credit risk alone.
mm,
Okay. The last 8 to 12 months have shown us that there's a different types of risks. There's a business continuity risk. Okay. There is a data and cybersecurity risk. There is a operations risk. So all of these, along with the credit risk, need to come together. So to answer your question, I think first is the acceptance that there are different kinds of risk, and it's not just bureau score. 700 plus, 720 plus. Those days, we've all done that. If your score is greater than 700, great, good guy. I think we got to deal a lot more in that. So I think that's there. But one also has to start look at alternative ways of assessing a customer. Again, it's not just the bureau. Are all of us comfortable looking at alternate data? Could be social media, for example, could be a lot of other stuff, right? So your answer is risk ready? I In my view, risk is ready from a point of view of mindset, but the point of view of ability and actually executing, I still think we are some way away. But I think the fact that they've accepted that they need to change their way, I think is a great step forward. So I think that's what will help us in 2021.
Interesting. And Ramki, you bring an interesting perspective, having a pan Asia and global view. You've worked with HSBC in Hong Kong. You've seen how other more mature markets function. Is there any learning from a risk perspective or any trending from there, right, that you can use to point that India is headed in this direction?
So let me give another example, which is to do with the moratorium. Okay. So the moratorium, for example, while it was there in India, it was there in other markets as well. So how we dealt with the moratorium was actually learning from how some other markets behaved, which ended their moratorium before us. Okay, so if you take a company like a country like Sri Lanka or Philippines, they ended their moratorium before us. Now, consumer behavior as to what happens when a moratorium ends, what happens in the first month, is something none of us have seen before, right? But that's where we were able to pick up and learn ahead of time that, okay, this is possibly what a consumer could do. So just for example, I moved a whole lot of my sales teams into collections for that month because I realized that that's the time it's not about collecting money, it's about educating the customer. Just for example, a lot of customers did not even know what the moratorium meant to them. But looking at what happened in Singapore, sorry, in Philippines and Sri Lanka and Malaysia. Malaysia was a very similar market like us, and Malaysia also had a very long, protracted kind of a moratorium. Those are the learnings that we can take here. So whether it's from the credit risk perspective, collections perspective, operations perspective, that is what we took back here. And I really think for it's good to be in a company like this where and people ask me, why did you leave HDFC Bank to join HSBC? HDFC is a great bank. I always say that. It's just in HSBC, I've realized that there's no problem that has not been seen anywhere else in the world. It's always there. It's happened to somebody. As long as you can pick up the phone and speak to them and figure out. So yes, I think there is definitely a lot of learning from all these markets.
Okay, very interesting perspective. Now, you clearly pointed out that there's a 250 million spot, right, which is people who are banked but have not got credit.
Yeah.
That's a very, very interesting 250 million. There's also 250 million that the bureaus are saying that they have as bureau accounts. Yet we have only 50 million cards outstanding in India. What is that we need to do to at least take retail credit cards, retail loans, right? From the 50 million people who are currently accessing it to the 250 million people who are in bureau, Ramki?
So look, I think firstly, and this I'm going to go back, let's say a year and a half back. If I were to just compare India and China, similar kind of market, similar kind of population, 50 million cards here, 400 or 500 million cards in China. Okay, so it's a very stark difference. But if you take the number of debit cards in China and India, very similar. So firstly, there's an Indian mentality of, if at all you want to use plastic, they prefer to use debit cards. So I think there is a consumer education that's required to say a credit card is not bad, provided you use it wisely. So I think that consumer education firstly will help in that 50 million going up to 100, 150 million from the bureau score itself, right? And then you get to what is beyond the bureau. So that's one about consumer education. Secondly, make it easy for the client. While we talk about credit cards, I know when we've spoken in the past, I've always been of the opinion that credit card as a plastic, as an instrument, I don't know how long it'll be. As a means of payment, you'll always need a means of payment, but is it going to be a virtual card or a plastic? So there will be a set of consumers who may not want a plastic in their wallet, but may need a virtual card to ensure that whenever I get into an online purchase, I'm able to use a virtual card. So that's the second thing, which is in terms of trying to figure out a kind of product that they need. And third and lastly is keep it very simple for them. They've been so used to filling up this long form, and I'm talking about new to bank, right? If it's an existing customer of mine, I'll be a lot more easier with them. But if there's a new customer coming in, we ask so many questions, so many forms to be filled up, verifications done, etc. Today, between the bureau and various other APIs that are available, you can do a very good verification of clients, which enables them to get a card almost instantaneously. So I think if you combine these three things, I definitely think there's a potential for this to jump up from this 50 million that we have today.
Makes a lot of sense. I think you mentioned using credit cards wisely, right? And I would consider myself a savvy user. And today, right, all spends happen on the credit card. But provided, right, you're able to pay your bills at the end of the month in full and use the card for the benefits and the convenience it offers. So that does make a lot of sense.
Yeah, and as
Now
a
we're going.
banker, sorry, as a
Go ahead.
banker, I shouldn't be saying this, but as you rightly said, pay back in full at the end of the month. As a banker, I earn the least out of clients like you. I mean, like me
Mm,
as well. I also pay back at the end of the day, but that
mm,
is the client I want. Okay, just to have clients who I know can pay back, and at the most, there are some clients who will forget to pay. That's a different thing. But who have the ability and the intention to pay back, that's what it is. And if you cannot pay back, by for God's sakes, don't spend. You will get caught in a debt trap at some point in time. And some people have seen, actually go and withdraw cash on a card. Again, my finance guy will tell me don't give away these secrets as a banker because you lose money. But I would much rather have a good customer understanding what you can do with a card.
Yeah, thanks for being so candid with us, Ramki, right? I think a lot of people would appreciate that candidness. Now, one would almost argue that in this lockdown, credit card is an essential, right? We
Yep.
think of essentials as things that we need, right? Would you say that is what is happening today?
I would say digital payments or
Hmm,
non-cash payments are essential. Like I said, credit
hmm,
card is one means.
hmm,
It could be UPI as an
hmm,
example. Okay,
hmm,
UPI is not a lending product, but it's a payment product. If I were to just take the numbers of UPI, um, in the last, if I just take November alone, we've had 2.2 billion transactions on UPI.
hmm.
Okay, that's about an 80% growth over January. So my point is there is a need to make payments. Credit card is a great prospect to make payments as long as you can use it wisely. So yes, I definitely think for anyone in this industry or in this environment, definitely have a card in your pocket, or a payment mechanism in your pocket, and a card is a very good option for that.
Fair enough. Fair enough. Now let's move to the next topic, which is digital and 2020 as an inflection point. Now, you must have been bombarded, right, running a retail bank when the lockdown started in terms of operations, in terms of HR, in terms of customer touch points. If you were to call out what the biggest learnings when it comes to digital work in 2020, what would those learnings be, Ramki?
First learning is everything can be done digitally. Okay, and I, I'm I'm possibly the guy who 12 months back would have said no, it cannot be done. Take my branch banking staff. Okay, my branch banking staff never thought they could work from home. Okay, and I actually agreed with them. But if things have changed in the last 8 months, I'm not saying the entire branch can work out of home. The branch still needs to be open, but a lot of stuff can get done. So I think the one thing is that it can be done digitally. I'll give an example of my contact center, which is where you call, for a phone banking kind of a helpline. 350 people working from their residences, and you have to look at the profile of these people. They're possibly, shared accommodation, bachelor pads. You have no idea how they actually operate, but they can operate. So that's one. So I think the first is the mindset that it can be done. Secondly, the fact is the consumer behavior is changing. Okay, consumers prefer digital, and it's when I say digital, a lot of them prefer do-it-yourself kind of means. But if not do-it-yourself, staff-assisted digital. So you have someone help them out with digital. So one is when we know we can do it, and secondly, the consumer says, I want it. Don't send papers to me. These two have been the biggest learnings. And when you have these two learnings, then you suddenly start building up technologies, you start building up products, processes, and all of that to try and help clients. That's, I think, what has been my biggest learning.
Fair enough. Ramki, like you said, right, every time I meet with you, there is a risk person in the room, right? Now tell me, what has been the biggest learning on the digital portfolio side through COVID?
Sorry, just repeat that question, Adil. I just lost you for a second there. Just repeat that question.
So I said, when it comes to the digital portfolio, what have been the learnings in 2020 on that digital portfolio?
See, if I were to take an example of, and I'll first talk about the industry and then talk about my own portfolio. Okay, the average time that a person spends on a smartphone used to be, I think, 3 hours and 10 minutes. It's gone up to 4 hours. It sounds like just 50 minutes, but it's a significant jump, right? Which means that a person is spending a lot more time on a smartphone. When he does that, what is it that you can throw up at him? And that behavior is reflected on my own portfolio, which means that my percentage of transactions happening digitally and mobile is now significantly jumped up. We call people as digitally engaged or mobile engaged. Okay, we have seen almost 100% growth in that. We actually launched something on our mobile phone on 1st of November. We had 100,000 downloads in 15 days. And this is HSBC, right? It's not like we are present in all corners. We got 26 branches, but 100,000 downloads in 15 days means clients want this. So digitally, I think the average usage has gone up, the time of usage has gone up, and whatever we had launched till about January of 2020, the take up of that has gone up. So it's, one is commercialization. It goes back to not just putting a card in somebody's pocket, but making sure they use it. Similarly, my kind of consumer for HSBC prefers to use a card on, I would say, higher range items or for discretionary purchases. I have seen that moving to essential purchases, all digitally, by the way. All of this happening digitally. So your grocery shopping is now happening on cards, which earlier used to be, let me buy a smartphone or let me buy a ticket, an air ticket. So those are the consumer behaviors that are changing, which are changing the way we are bringing products to them. So that's how my digital portfolio has changed.
Right. And, when it comes to fintechs, right, how would a large retail bank such as yourself think of the fintech industry? Is it compete or is it collaborate? What is the outlook going forward?
I think, Adil, that debate in my mind, I killed it almost 2 years back. Mm-hmm. I don't think either you or I will succeed if we compete against each other. Mm-hmm. Okay, it's not worth it. There is no doubt in my mind that this is a collaborate. You bring certain skill sets that I would much rather collaborate with you and take those skill sets than try and build them on my own. Secondly, I bring certain benefits that you would much rather collaborate with me than try to build that on your own. So I think that debate in my mind is a closed debate. It's always collaborate. Let's use each other's core competencies and bring that together, because honestly, there are lots of stuff banks cannot do alone. And similarly, there are lots of stuff that fintechs cannot do alone. What you and me are now working towards launch on 1st of Jan, that our pre-approved scheme. I don't think you would have done this on your own. I know, you work with other banks as well, but you can only do that with a bank. And I would, by if at all I had to build that entire technological platform, it would have taken me another year. So for me, I think it's a no-brainer. Always
Makes
collaborate.
sense. Now to the last topic, Ramki. Now you mentioned business continuity, and I'm sure since HSBC is in so many markets, right, you have a strong view on this. Is COVID behind us, Ramki, when it comes to retail ops? Or what we're hearing in UK is that there's a resurgence. How should people be thinking of 2021 from a COVID perspective?
See, I'd say COVID is not entirely behind us, but I would
Hmm,
say we've passed the, I mean, the peak of the storm. I would say we've probably passed it. I'm not an expert on COVID or medicine,
hmm,
but
hmm,
I think we have seen enough of COVID to know how to tackle any further storms that are coming forward. The
hmm.
question I ask myself is this, Adil, is that, for example, today we have every all you and me, we all changed a lot in the last 8 months because COVID happened. But now I look back and say, why did I have to wait for COVID for the change to come about? Okay, just for example, I have something called customer focus group meetings with all my customers in all my branches every month. We would go and attend it, as in I would go across to a branch and sit there and watch it. Today, that doesn't happen. It happens via a Zoom call. And I sit from here and watch even a Delhi or a Calcutta, this thing. Now I think, why could I not do this 12 months back? So I think that's what we have to think about. What is it that now we are missing? Because we don't want to wait for another COVID kind of situation to come in. So that's one part of it. Secondly, I think both consumers and bankers need to remember one thing. Consumer behavior is changing. Just as an example, go back to the moratorium. When the moratorium was announced, it was meant for people who cannot afford to pay. You'd be surprised at the number of people who opted for the moratorium, even though they had the money to pay. So these are behavioral changes that we have to see, and we have to build that into our risk modeling. That when a black swan event like this happens, even if you are good to pay, you will not pay because of XYZ reasons. So far it's been very templated kind of risk modeling. Let's add these kind of elements that we probably haven't thought about before.
Fair enough. And if we think about which retail products will scale in 2021, where should we be putting resources, Ramki?
I think what I see on the screen is probably what I'm going to say. It
Hmm,
says cards and loans. I think definitely unsecured is a way to grow.
hmm,
Sure, we'll have other products, etc., which will also grow. But
hmm.
I think cards and loans have a larger market, have a faster time to market. If at all we want to bring about changes, and it can be done digitally. I still worry about the fact that, let's say, a mortgage can't be done completely digitally. There are still a lot of paperwork, right? So it's important to have a digital touch and feel. And when I take a product like credit cards or loans, everything can be straight through. I mean, you apply for a loan today, and I mean now, and within maybe 15 minutes or 20 minutes, your account gets funded. Yeah, so that's why I believe cards and loans are possibly the ones that we have to put our focus on, not just alone as a bank, but like people like you have a great kind of understanding of this market. So partnering with people like you, I think that's going to be our focus even going forward.
Fair enough. And see, credit cards, like you have said, and the RBI data shows, spends are already back.
Yeah.
As far as personal loans go, right? People are saying maybe one more quarter. Is that the right kind of view we should take on personal loans?
I would think so too. I think cards was
Mm,
faster to come back. I think we are close to about 90 to 95% of pre-COVID levels,
mm,
which I think is good. Yes, I think loans, I also would give it at least a quarter more. Cards has come back, but I would also want to say on cards, the amount has come back to 90-95%. The type has changed. The mix has changed. If I would again take a bank like me, I had a significant portion of my card spend going on international travel because that's my customer profile, I would say, right? That's changed. So the mix has changed, but the amounts are back. So that's what I would say. And but loans, as you were saying, possibly another 3 to 4 months, and we should be back to pre-COVID levels.
fair enough. Fair enough. Now, given the paucity of time, the last professional question. When we think about market share going forward for the next 3 years, Ramki, between the foreign banks, right, and the Indian banks, what do you think the foreign banks' outlook on the Indian market is going into the next few years?
See, to be honest, going back to the point I mentioned earlier on video KYC, prior to video KYC, I was completely constrained by my geographical distribution, right? Whereas if I were to take an Indian bank, if I take a city like Mumbai itself, I may have some 6 or 7 branches, and another Indian private sector bank might have maybe 150 branches. I was constrained by distribution. Now I am not. Okay, that gives me a significant step up. It of course helps all the banks. It helps Indian private sector banks as well. But therefore, I see the one is the pie growing larger. My personal view, and I'm not saying this because I'm a foreign bank, but because of this part about the the geographical reach thing being taken away because of digital, I would think foreign banks could probably grow a lot faster. That's one big change for me.
Very interesting perspective. The first time I've heard it said like that. But I think the regulator with video KYC in Jan 2020, and just yesterday, hot off the press, CKYC came out in our RBI Master KYC direction. I think these are game changers. And like you said,
Yeah.
physical presence doesn't make a difference. Ramki, one personal question. People, obviously have had a tough 2020. All of us in our own way, right, have been through ups and downs. Any personal advice to people, who are coming out of a tough year, going into a new year right now?
Look, I'd love to say that it'll always be better, and that's what everyone says. But I would put it the other way around. I would say you've been through such a tough time that there will be tough times further ahead, but you've been through such a tough time that you can easily now handle anything else. That's really what I think. I'm not going to tell anyone that there are no more tough times ahead, it's going to get easy. But I'm only going to say that if you really look back on it, you are much more prepared. And I'm saying this as an institution, I'm saying this as an individual. Every one of us is much more prepared to take on anything else that the world can throw at us. For me, and it sounds very simple and I don't know, very basic, but that works for me, Adil, honestly.
No, that makes a lot of sense, and it's honest. On that note, Ramki, thank you for such a candid conversation and giving us a very clear idea in terms of how someone leading a large banking outfit is thinking of 2021 and how digital, right, especially video KYC, plays into that calculus. So, thank you for sharing your valuable time. I've learned a lot. I hope the people watching have, and we appreciate your time. Thank you.
Thank you so much, Adil. Thanks a lot for